What is happening, crypto fam? Get ready because the news cycle is absolutely exploding, and you need to be dialed in for these game-changing updates. We've got seismic shifts happening across the board, and if you're not plugged in right now, you're missing out on the biggest moves shaping the future. From high-profile predictions that could redefine value to major institutional plays that are shaking up the entire market, this is the moment to stay informed. We're breaking down the intel that matters, the moves that make waves, and the insights that will keep you ahead of the curve. So buckle up, because this is Bitcoin Bulletin, and we're diving deep into the action. First up, we're talking about a massive institutional playbook that could be rewriting the rules for corporate treasuries and the acceleration of Bitcoin itself. Get ready to see how big players are making their moves. Then, we're heading to Hong Kong for a prediction that's turning heads, with a major figure forecasting a staggering price target for Bitcoin that sounds almost unbelievable. But wait, there's more. We're also diving into the signs of institutional doubt, with massive outflows and technical indicators suggesting a potential shift in market sentiment that you absolutely need to understand. And finally, we're exploring the strategic case for another major player in a post-Bitcoin rotation era, looking at what it means for the broader ecosystem. You do not want to miss a single second of this. Make sure you hit that like button, subscribe, and ring that notification bell so you never miss an update. A new era of treasury strategy. This is a pivotal moment where the very foundations of corporate finance are being re-examined, with significant implications for digital assets. The traditional playbook for managing company treasuries is undergoing a radical transformation, and institutional players are at the forefront of this acceleration. We're seeing a strategic shift that could redefine how businesses allocate their capital and hedge against economic volatility, with Bitcoin emerging as a central piece in this new puzzle. This isn't just about holding a new asset. It's about fundamentally rethinking treasury management in a rapidly evolving global financial landscape. The interplay between established corporate finance strategies and the burgeoning digital asset market is creating a dynamic environment where innovation and adaptation are key. Experts are closely watching how these institutional moves will influence market stability, adoption rates, and the overall trajectory of digital currencies. The decisions being made today by major corporations could set precedents for years to come, impacting everything from investment flows to regulatory frameworks. This evolving narrative suggests that the integration of digital assets into mainstream corporate finance is no longer a distant possibility, but a present reality, driven by a confluence of technological advancements and changing economic imperatives. The focus is on how these strategies will be implemented, the potential benefits and risks involved, and the broader market sentiment they will foster. It's a fascinating intersection of traditional finance and the future of money, with institutional adoption acting as a major catalyst. The question on everyone's mind is whether this institutional acceleration marks the beginning of a sustained bull run or a more complex, nuanced integration into the global financial system. The details of these strategies are intricate, involving risk management, diversification, and a forward-looking approach to capital preservation and growth. The institutional playbook is being rewritten, and the impact on Bitcoin and the wider market could be profound. Now, hold on tight because the predictions are getting even bolder, and we're about to hear from a prominent voice about Bitcoin's future price trajectory. Next, we're diving into the critical signs of institutional doubt that could signal a major market shift. Trillions and $1 million dream. Prepare for a prediction that's sending shockwaves through the financial world, as a prominent figure has boldly forecast a staggering price target for Bitcoin, envisioning it reaching the $1 million mark. This high-profile declaration was made at a significant industry event, drawing considerable attention and sparking intense debate about the future valuation of digital assets. The speaker, known for their influence in financial circles, leveraged a major platform to articulate a vision of Bitcoin's potential, suggesting that trillions of dollars could soon flow into the cryptocurrency market. This forecast is not just a speculative anchor. It's a statement of profound confidence in Bitcoin's long-term value proposition and its potential to disrupt traditional financial systems. The prediction comes at a time when institutional interest in Bitcoin continues to grow, with many corporations and investment funds actively exploring or already integrating Bitcoin into their portfolios. The speaker's optimism is likely fueled by the increasing adoption, the development of robust infrastructure, and the perceived role of Bitcoin as a digital store of value, often compared to gold. However, such ambitious price targets also invite scrutiny and skepticism. Analysts and market watchers are dissecting the underlying assumptions, considering factors like market capitalization, adoption rates, regulatory clarity, and macroeconomic conditions that would need to align for such a monumental price surge to occur. The sheer scale of this prediction highlights the speculative nature of the crypto market, but also underscores the immense potential that many see within Bitcoin. It's a narrative that captures the imagination and fuels the bullish sentiment that has characterized much of the cryptocurrency's history. The implications of such a price point would be transformative, not only for individual investors, but for the global economy, potentially cementing Bitcoin's status as a major financial asset. The event itself served as a crucial gathering point for industry leaders, policymakers, and enthusiasts, providing a backdrop for these significant pronouncements. The confidence expressed by such figures can influence market sentiment and investment decisions, creating a self-fulfilling prophecy, or, at the very least, contributing to the ongoing discussion about Bitcoin's ultimate market value. This prediction is more than just a number. It's a reflection of a belief in a future where digital currencies play a dominant role in the global financial ecosystem. But as optimism soars for some, others are pointing to critical signs of institutional doubt that you absolutely need to be aware of. And then, we'll explore the strategic case for Ethereum in a world where Bitcoin might be rotating out of favor for some investors. Market doubts emerge. Critical indicators suggest a potential shift in institutional sentiment, with significant outflows from major exchanges and technical analysis pointing towards increasing downward pressure on Bitcoin. A colossal move of approximately $940 million worth of Bitcoin, specifically 25,000 BTC, has been transferred out of Coinbase Pro, an exchange favored by institutional investors. This outflow represents the largest such movement since the sharp price correction experienced in June 2025, signaling a potential bearish outlook among large-scale holders. Compounding these concerns, data indicates that the total amount of Bitcoin held on exchanges has fallen to a 4-year low. This suggests a broader trend of investors migrating their assets to cold storage solutions or long-term holding wallets, indicating a desire to reduce exposure to immediate market fluctuations or an accumulation strategy away from readily tradable platforms. The implications of these on-chain movements are substantial, as they often precede significant price action or reflect underlying shifts in market confidence. Adding to the bearish narrative, technical indicators are flashing warning signs. Analysts have noted a bearish divergence in momentum metrics, which, coupled with the failure of Bitcoin to maintain key support levels, raises the specter of further price declines. Specifically, if critical support zones are breached, price targets ranging from $92,000 down to $70,000 are being discussed by market watchers. The broader macroeconomic environment also plays a crucial role, with tightening liquidity conditions and a notable slowdown in demand across both futures and spot markets, contributing to the prevailing uncertainty. Some reports even suggest that a significant drop in trading volume, potentially around 60%, could precipitate a sharp price correction of up to 33%, potentially driving Bitcoin towards the $49,000 mark under extreme scenarios, though these remain speculative predictions. While some analysts propose a scenario where Bitcoin might stabilize between $70,000 and $95,000, potentially entering an accumulation phase before a rebound, the immediate sentiment appears cautious. The recent breach of key multi-year support levels has also fueled concerns about a potential breakdown below the psychologically significant $100,000 threshold. The divergence between Bitcoin's price action and that of traditional stock markets, which have shown more resilience, further highlights the unique pressures facing the cryptocurrency. This complex interplay of on-chain data, technical indicators, and macroeconomic factors suggests that the market is at a critical juncture, with institutional behavior providing a key barometer for future price movements. Now, as we digest these signs of caution, we're going to pivot to a different kind of strategic thinking, looking at the case for another major digital asset. And finally, we'll wrap up with a look at how these market dynamics might be setting the stage for future opportunities. Ethereum's strategic position. In an evolving market landscape, the strategic importance of Ethereum is being reassessed, particularly in the context of potential shifts away from Bitcoin dominance. As investors and institutions consider their long-term digital asset allocations, the unique value proposition and technological advancements of Ethereum are coming into sharper focus. This perspective suggests that while Bitcoin may be the pioneer and often the primary focus, Ethereum's robust ecosystem, its ongoing development, and its role in decentralized applications, dApps, smart contracts, and the burgeoning DeFi and NFT sectors position it as a critical component of the digital asset future. The narrative of a post-Bitcoin rotation era implies a market phase where capital might diversify beyond Bitcoin, seeking growth and utility in other digital assets. Ethereum, with its massive developer community, continuous upgrades like the transition to proof of stake, which significantly reduced its energy consumption and improved scalability, and its foundational role in countless blockchain projects, presents a compelling case for continued investment and development. Analysts are exploring how Ethereum's ecosystem maturity, its network effects, and its potential for further innovation could drive its value independently of, or in conjunction with, Bitcoin's performance. The programmability of Ethereum, enabling complex financial instruments and decentralized services, offers a different kind of utility compared to Bitcoin's primary function as a store of value. This distinction is crucial for investors looking to diversify their digital asset portfolios beyond a single asset class. Furthermore, the development of Layer 2 scaling solutions and ongoing protocol improvements aim to address previous concerns about transaction fees and network congestion, enhancing Ethereum's usability and scalability for mainstream adoption. The competitive landscape is also a factor, with other smart contract platforms vying for market share, but Ethereum's first-mover advantage and entrenched ecosystem provide a significant moat. Understanding the strategic case for Ethereum involves appreciating its technological underpinnings, its economic model, and its role as the backbone for a vast array of decentralized technologies. As the market matures, such strategic analyses become increasingly important for investors aiming to navigate the complexities and capitalize on the diverse opportunities within the digital asset space. The conversation around rotation isn't necessarily about a decline in Bitcoin's value, but rather about the increasing maturity and diversification of the broader digital asset market, where assets like Ethereum offer distinct advantages and use cases. And that brings us to the end of our deep dives for today, but we've got a quick recap coming your way. Stay tuned for our lightning round summary, and don't forget to hit that subscribe button. All right, everyone, that's a wrap on today's essential updates. We saw institutional playbooks being rewritten, a massive prediction of trillions flowing into Bitcoin, critical signs of institutional doubt emerging, and a look at Ethereum's strategic case in a shifting market. Don't miss out on any of these pivotal moments. Hit that like button, smash subscribe, ring the notification bell, drop a comment below with your thoughts, and follow us on all our social channels to stay connected. We'll see you in the next one.